A lot of advice about credit starts with just get a credit card, but what if you're not comfortable with that or you didn't get approved in the past? Today, I'm gonna show you how you can start building credit even if you don't use a traditional card. Before we get into specific tools, it helps to know what your credit score is actually based on. Your credit score is an important factor in your financial life. It may be considered when you apply for things like loans or apartments or even some utilities. Your credit score is made up of 5 different factors: payment history, amounts owed, length of credit history, credit mix, and new credit. Payment history is just paying your bills on time every month. This is the most important factor when it comes to your credit score, and it's how you build trust with lenders. Make sure to set up autopay so you don't accidentally miss a payment, or at the least set reminders in your phone to always make your payment on time. Amount owed is the amount you've borrowed as well as your credit utilization. Generally, keeping your credit utilization lower is best. For example, many people aim to stay below 30% and some try to stay below 10%. If you have a credit card with a $10,000 credit limit and your balance is $4,000, that puts you at a 40% credit utilization, which is high. If your balance is $500, that puts your utilization at 5%, which would be considered low. Be mindful of how much you owe, make sure to pay down your balances, and request credit limit increases periodically to help reduce your utilization. Length of credit history is the average age of all of your accounts. What helps here is opening lines of credit early to establish credit. Over time, your age of accounts will grow and improve your credit score. Make sure to avoid closing old accounts like an old credit card to avoid losing that credit history. This can end up lowering your credit score accidentally. Credit mix looks at your ability to handle multiple types of credit like student loans and mortgages and credit cards. Showing on-time payments for multiple types of accounts can help improve your credit, but don't open up accounts just for the sake of your credit mix. Over time, you'll likely end up with a credit card, mortgage, a car loan, so your credit mix tends to improve naturally. Lastly, new credit refers to new hard inquiries. When you open up a new credit card or student loan, the lender will process a credit application for you in order to approve your new account. When you open up new credit lines, there's no payment history to show you're responsible for it, so it can negatively impact your credit short term. But as you build a positive payment history, your score may improve over time. One of the most impactful things you can do for your credit is just being consistent. Make your payments on time, keep your credit utilization low, and over time you should see improvements to your credit. While credit cards are a great way to improve your credit mix, establish a payment history, and eventually grow your credit, a traditional credit card isn't the only way to start building credit. There are 3 options we're going to talk about today to build your credit without a traditional credit card. The first is rent reporting. Most of us go through a credit check in order to qualify for an apartment, so why wouldn't our payments contribute to our credit as well? Rent is often our largest expense, so this is a really great way to build trust with lenders and improve your credit. Some rent reporting services may report on-time rent payments to one or more of the 3 major credit bureaus. Availability, cost, and which bureaus they report to can vary by provider, so it's important to check the details. Since rent is often your biggest monthly expense, this can be a useful way to build payment history using money you're already paying. The next option is credit builder loans. This is another way to establish a positive payment history. With some credit builder loans, your payments are held in an account and may be released to you after you've paid the loan in full, often minus any interest or fees. These loans are designed to help people with little or damaged credit build a positive payment history while keeping the lender's risk lower because the money is set aside during the term of the loan. The last option to build your credit without a traditional credit card is a secured credit card. A secured card works a lot like a traditional credit card, except instead of spending money you borrowed, you're spending against your own money. The idea is you put down a refundable security deposit that becomes your credit limit. Use your card just like normal and make your on-time payments each month just like a regular credit card. The issuer can use your deposit as collateral if you don't pay. Because your deposit reduces the risk for the credit issuer, secured cards can sometimes be easier to qualify for than traditional unsecured cards. They can be a helpful option for people with limited or damaged credit who might not qualify for other cards, and they can help you build a positive payment history when used responsibly. Just a reminder, everyone's situation is different, so results can vary based on your financial situation and credit profile. At the end of the day, improving your credit is about consistency over time and managing your accounts responsibly. It won't improve overnight. It can take months or even years to see substantial improvement, but the habits you build here will help you for the rest of your life. And remember, you don't need to use every single credit builder product out there, just the ones that work best for you. If you found this video helpful, check out Chime's YouTube channel for more money tips and tricks like this.